fencing around 2,000 square foot to keep squirrels out for that very reason. It's kind of funny.
Mine are raised beds, and so this is the third summer that I've had them. And I was told to plant marigolds around to keep the deer out of them, and then you don't get the ground rodents. And
Hmm.
uh, the marigolds have, until I thought till this year, had protected them. I'm like, why are these marigolds not? I mean, it's not a flower, right? It's pretty or smells good. So it's like, why aren't these marigolds working? Um, and the and yeah, then I found that. So everyone on, you're not on the wrong episode. I was asking the guys backstage if they knew what a tobacco horned worm was. Chat GPT it. It's ugly. It's disgusting. So life at the
There's your
farm.
knowledge nugget of the day.
Yeah. 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 So yesterday was like an interesting day on the farm because that was in the morning. I found the tobacco hornworm and it literally is like eating whole tomatoes, like full size tomatoes right off the plant, leaves and all. And it's just like this big. Then I was out mowing around the outside of the pastures and I was in a really tight area and a piece of a grapevine fell off and I thought it was a snake and I'm deathly afraid of snakes. So I like came up off of the seat and turned around because it like fell down my back
Ah,
thinking it was going to be a snake and it was a stick. And then I get to the another pasture on the outside and a bird lands on my leg. Like this little tiny gray bird lands on my and it won't fly away. Like I think it might have like flown into something and dazed itself, but it's sitting on my leg and I don't want to touch it because I'm afraid I'll like be diseased. But yeah, it was an
On the farm.
interesting farm day yesterday. I don't know what's going on. Yes, I didn't touch the bird because I
Yes,
didn't
bird
want
flu.
bird flu. Yeah, or anything like that. All right. Well, we've passed the 2 minutes to allow everyone to get loaded into the session. So, welcome everyone to the SIP, a space where conversation fuels connection, collaboration drives innovation, and industry leaders come together to tackle challenges, just like catching up over coffee or over a bourbon that I had yesterday after my experiences. The SIP is all about meaningful discussions that move us forward. And at TMC, we're committed to fostering a forward thinking environment where our members thrive, grow, and make lasting impact. And today, we are here to share insights and real world experiences and strategies that highlight the power of working together. A big thank you for taking time out of your day to join us. And today's show is proudly sponsored by our friends at Vice Capital. If hedging your pipeline is something you have been considering, if you already hedge, but wonder whether you're getting everything out of the relationship, this is conversation is for you. And joining me today is Chris Bennett, the chairman of Vice Capital Markets. Chris, welcome to the SIP.
Jody, so glad to be on here with you too. It's going to be a great session.
All right, awesome. And we've got the lender's perspective in the house today. Mark Renault is the SVP and Chief Mortgage and Consumer Lending Officer at First State Bank in Michigan. It's where he shares what he actually looks like on the other, what it actually looks like on the other side of the relationship. And Mark also serves as TMC's lender member board. He actually is the secretary and has to take all the notes, which we were talking about. It's a daunting task. And will be stepping into the vice chair position next calendar year. And he's also on our advocacy committee. So he brings a broader industry lens to all of us today. So, Mark, we're happy to have you.
well, glad to be here. Like I said, I have an opinion on everything. Just ask.
Yeah,
As
thank you so
does
much, Mark.
everyone. We like that we get to ask you instead of you just like airing it on social media. Some people do. So, Chris, let's get started at the top. For a lender out there who is on the fence about hedging their pipeline at all, what is the case for doing it, for starting to hedge?
Sure, Jody. There's a couple different facets to it. There's some folks, especially depositories, that sometimes will think, well, if I'm going to hedge my pipeline, that's really risky. Where the actual definition of the word hedge is to protect against risk, right? So, especially if you're a depository, but as well if you're an IMB, hedging is about prudent risk management. As an institution, you have all of these other things that you're doing to protect yourself against risk, and hedging is protecting that interest rate risk on your pipeline. Sometimes people will think, well, I make more money because I hedge. That's not really exactly the way it goes. You make more money by being able to take advantage of advanced executions, being able to go to market for immediate delivery, have people compete to be guaranteed to buy assets right now today from you, and that pays a much higher premium. You protect your risk on that, and you protect those margins by the hedging process. You can't successfully have one without having the other. So hedging is the way that you can safely realize those gains. And really one of the key parts to it as well, Jody, is it isn't just about, well, I'm hedging so we make X amount of money. That certainly is very important, right? But it's also part of taking total control over your pipeline and the processes, things like extensions or relocks or renegotiations. When you have a hedging program, instead of, well, we need to see what so-and-so investor's policy or this agency's policy is, they get to be your company's policies, and you're managing that risk via your hedging program. So it's a way that you can take advantage of new opportunities that present themselves, and also a way to make it so it's really about your company's policies and your company's processes, and not being kind of enslaved to an investor's policies or an investor's methodologies and ways of doing things.
And I think that that's sometimes the fear of lenders is they don't personally have the expertise, so they aren't necessarily convinced that they can work with someone to hedge because they won't know what they're overseeing to ensure against risk. But once a lender does decide to hedge, what do you think it actually sets, and this is for you, Mark, what actually sets it's for Chris, what sets Vice Capital apart? And, I know you have some strong feelings about competition and that, so Chris, please share.
Sure. I think everybody's not a right fit for everybody, but one of the reasons that people choose us when they choose us is, we've been doing this for 25 years. This isn't some new vertical that we've gotten into, right? This has been Vice Capital's bread and butter ever since I founded the company. It was literally 25 years ago this month, so our anniversary is coming up. I have to have something fun to put out there about that. One of the things that's different about us, I guess, also we have a smaller number of clients compared to some of the larger firms out there. We have about 40, where some are 200 and 300. So it's a different kind of experience. Instead of just, here's your account exec, a very nice person who's 28, but they've never actually sat in your chair. You're dealing with people that have been doing this for 10 years and 20 years. They've sat in your chair. When you want to talk about things like strategy, you're talking to the president. You're talking to me, who's been in the business for 34 years and founded the company. So we're not small by any means, and we've traded over $1 trillion in our history, and we're actually the third largest hedging firm in the country. But it's a different kind of experience in that when you want to, if you need something added, if you want something customized, instead of just being put into a queue, you're talking with somebody who can take care of this, and we can be nimble, we can pivot quickly, and we can do things that are for just you because we have a smaller number of clients. It's much more manageable, and you can deal with people that are kind of on the very top level. Some of our clients, Jody, we have a lot of folks that are full service where they want us to do all the hedging, all the trading, all the loan sales. And then others where they just want our reporting. They want to do all the hedging and trading themselves. And that's great too. We've got a number of different programs depending on what works best for your firm. And you can shift on the fly too. If you decide that your needs have changed, your personnel's changed, and you want to do this, you want to do that instead. We have some that are very involved every time loans are being sold or in the whole process. And we have some that are more of a set it and forget it. And we touch base every week or so and see if anything that they want to do on their end needs to be tweaked. So it's really very customizable depending on what the client wants their experience to be.
Yeah. And we're going to stick with you for one more and talk about the power of scale. So talk to us about what happens when you combine pipelines across your entire client base. What does that actually unlock for lenders that are trading on their own that they could get from the power of scale?
Yeah, sure. Yep. And just to clarify, we're not actually going to mix anyone's loans with anyone else's or pipelines. But what we can do for the clients that have us do the trading for them, whether it's core hedging or part that includes allocation as well, or forming Ginnie Mae securities, whatever that is because we have traders that are in the market, I mean, not every minute, but pretty gosh darn close to every minute. Instead of, if you're doing your own trading, you're going to be in the market once or twice a day, maybe it'll be 3 times. You've got a much smaller window into what's going on in the marketplace, where in our case, again, because we're in there making, I don't know, 10, 20, and 30 trades every hour, our multitude of traders are constantly out there interacting with dealers. We know that ABC Mortgage Company needs 2 million of Fannie 6s, and XYZ Bank needs 5 million, and LMNOP Credit Union needs 1 million, and this other lender needs 4. So we can actually go to market with a $10 million piece. We can get superior execution by beating on dealers for this much larger block than each of these individual blocks. And all that goes right through to the bottom line of the client. And as soon as we execute that, then now we say, all right, 2 million is for ABC Mortgage Company, 5 million is for XYZ Bank, what it might be. So pipelines aren't being combined, but we can use the power of all the client pipelines that we're managing to be able to get better pricing in the market by going to dealers with things that are much more appealing that they'll fight each other over.
Yeah. That is awesome. And Mark, I know you well from your interaction with the Mortgage Collaborative, and you're constantly looking for data and reporting. So from your seat, what does it actually translate to when you look at the reporting that you receive from Vice Capital?
Yeah, no, it's great because what they provide me is exactly what I need. Even though I get every possible report that you need to verify the hedging, the pipeline, and your inventory, everything that's going on, I've got 3 pages that I look at. I go here, 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 I'm done. I know they're following our risk model because I see where the market might go and what might happen. Like, nope, we're right in line. And it's simplicity. And to Chris's point earlier, they do everything for us, quite honestly. I've worked with them through 2 companies. We've been working together for over 20 years. So I always like to say I'm one of his first clients, one of the first 10, I think, or something like that. But
Absolutely. Yep.
It's just been great. And to his point, I came here to the community bank I'm at now. It was 15 years ago, and I had to convince them to let me start hedging because my running joke was they didn't know how to spell FHA when I first got here. And now it's like we went from doing 30 million a year to doing 30 million a month. And it's just been, it's been a great ride. And they've really, really helped. Chris and his folks, they sat down with our president. They explained what was going on. And anytime I need them, I just dial their number. They don't have voicemail. You get a human every single time. The service is amazing. Like I said, I've said it all too many times. They're the best in the business. I wouldn't go anywhere else.
Appreciate that, Mark.
And like kind of dig a little bit deeper into that 20-year relationship across 2 institutions and what kept the relationship going for so long. And everybody wants a juicy gossip. So I'm sure that there were like times that things weren't, so smooth, or something was happening in the market because let's face it, we've all been through a lot in the last 2 years, let alone 20 years. So talk about, highs, lows, and that relationship a little bit further.
Yeah, what Chris had mentioned earlier, it gives us the ability to control how we address our pipeline. It's our standards, it's our rules. I don't have to sit here and think about, this investor, we have to do this, this, and that. I have to extend, it costs this. I don't have to think about any of that. It's just, I've already set my standards. I'm good to go. They do all our executions for us. I don't have to think about it. They send us our list on a weekly basis. We confirm it. Yep, this looks good. The amount of time it takes my people working with Vice Capital to actually get our loans allocated and sold is so minimal that it allows me to focus on other things operationally than having to worry about that, because we're a small community bank. Yep, we've been around for 110 years, but the reality is we don't have the expertise here for this at all. So I could stick doing best efforts and leave 20, 30, 40 basis points, depending on the day on the table, or I could get better execution, control how I deal with my inventory, and have a lot more say in it.
You mentioned that. Oh, I'm sorry. Go ahead, Chris.
No, I would just say one of the things that we've had some people do when they've made that change is, in some cases, they've taken that like Mark talked about, 20, 30, 40 basis points in difference in execution, and that's an important part of their margin. They've done some other things with it. We've seen still others decide that we want to be in growth mode. We're going to actually take this new execution that we're getting, and we're going to push it through to our loan officers. We're going to push it through to the street, and we're going to use it to grow. We're going to use it in recruiting. We're going to make it so that we can now increase our loan officer count by 30%, 50%, 70%, and actually keep the same margins that we've had this whole time. And part of it can be, as a company, as you evolve, and we've helped a number of folks that had no agency relationships to get those relationships, people that had agency relationships, but were asking about what would it be like to have my Ginnie Mae ticket. We can talk to them about, here's what the execution looks like. We're out there trading Ginnie Mae custom pools. I mean, sometimes we'll have close to 100 pools a day we trade. So we've got color from all over the market as to, here's what each one of these characteristics are worth. And a company can take a look and say, gosh, that makes a lot of sense for us. You know, one of the advantages of not just going on your own, but getting the eyes and ears of 40 different other lenders that are all over the country is you can be told and find out, not just before the fact, but as you're in the process, here are some pitfalls that we're seeing out there. Here are some other opportunities that might make sense for your firm to take a look at. So there's some other advantages that come along with being part of a larger organization, just like with TMC. We actually, I'd say almost 40% of our clients are also TMC members. Usually whenever anybody comes on board to become a new vice client, if they're not a TMC member, we have the conversation with them about it. We've just seen so many lenders that, not just conferences, but through especially the collab labs, they get such a tremendous value out of TMC at really very, very minimal cost. So there's a big reason that a lot of our clients are TMC members. It's because we strongly advocate for it. We think it's about the best deal out there.
Yeah. And to your point, there's a couple of things I want to circle back on, but one being, we do have a capital markets working group, and it's that working group happens once a month, and it's one of our most well attended working groups for TMC. That is, it's very important to help people feel comfortable and, help reassure each other that they are doing the right thing. So if they are hedging, that they are, talking back and forth about what they're seeing in the market. The other point that you made was about growth. I get multiple phone calls a week about lenders looking to grow. And one of the things that I tell them is you got to get your agency tickets, but there is this belief that, well, that means then I also have to set up servicing. And I don't know if I'm ready to do that, but what the opportunities to be able to be a seller, but be able to also sell the servicing on that. Can you talk the audience through that so it helps dispel those fears?
Oh, sure. There's more opportunities than there ever have been before. I'd say back 10 years ago, especially if you wanted to go directly to the agencies, to Fannie Mae and Freddie Mac, but not service the loans, you'd set up a co-issue deal with a large aggregator or one who just wanted to buy that servicing. And so you had one deal set up, it was all structured in there, and that's how all your loans went. Well, now Fannie Mae has a program they developed just under 10 years ago called SMP. Freddie Mac has two of them. One is called CRX and one is called CIX, where you can, instead of having to have just one co-issue arrangement, so co-issue being where you sell to Fannie or Freddie for cash, and then the servicing at the end of the month is being purchased by a co-issue buyer of the servicing. But with SMP and with CRX and CIX, they work a little differently, but the premise is that you have multiple servicers. In some cases, you might only have 2 or 3 you're signed up with. Some cases you could have 7 or 8, and they're all essentially bidding on the servicing of each individual loan that you have every time that you go to market. So you're getting an extremely competitive environment. If you don't want to sell to a certain, say there's somebody who you're a little concerned about getting a new loan from that borrower, you can exclude them from the process. But it allows you to take advantage of an immediate cash delivery, getting funded by Fannie Mae or Freddie Mac, and your servicing immediately being sold. So you don't have to service the loan. You still have a nice customer relationship, of course, but you can receive all the cash from that transaction. And in some cases, you can actually be paid for it at that exact same time. So it's really, there's never been more options, and it's never actually been easier to be able to have an agency relationship and not have to service and receive cash for that servicing value at the same time.
Yeah. And, and it's also never been easier to get your ticket.
Yep.
So, Fannie has a team that helps lenders get their Fannie tickets, and Freddie is also a very easy process. Like if you can organize folders and put documents in folders, and have experience as a lender, meet the requirements, it's the barrier to entry is much lower than it was when I went and got tickets for lenders in the past. So I encourage everyone to do it if you want to grow. Why shouldn't you be earning the value of servicing, whether you are retaining or also selling that servicing, and to make sure that you have essentially every quiver to be able to use for pricing purposes in this crazy market that we tend to be in.
It
Mark, I
helps
want
for
to
well,
go
just
ahead.
ones I want to say also, I think it also helps in recruiting to be able to go to prospective loan officers and say, we're actually an agency direct seller. That carries a lot of weight for a lot of people. But I didn't
Yeah,
mean to interrupt
absolutely.
there.
No, absolutely. And Mark, you mentioned it took a while to get your leadership team
Yeah.
convinced that they should be hedging. And another thing that we talk about a lot in the industry today is adoption and change management. So what was like the final aha moment where they were like, all right, go ahead?
Ironically, it was our CFO at the time, who's now our president. Um, he was really trying to understand the concept, and what kept screwing him up was with the whole hedging. You're always, you're selling that hedge before you're actually buying it. He couldn't grasp that concept. He's been an accountant for 20 some years, and he's just like, it makes no sense to me. And then finally, Chris actually went out to lunch with us and explained it to him one more time, and he was like, aha, I get it. He's like, okay, run with it. I was like, thank you. But
So
again, it
things
goes
happen
that,
over a sip.
yeah,
That's right.
it's exactly it. I mean, it's the customer service. I could pick up the phone right now and I would have Troy, who's the president of Vice Capital. He'd be on the phone in probably about 30 seconds, help me with any problem I have.
No.
The service really is amazing. It's second to none.
Another myth that we have in the industry is that what type of lender that you have to be
No.
to consider hedging. So before we wrap, I want to make sure that the listeners know who this is actually for. So Chris and Mark, each of you maybe walk me through the range of lenders you see using a hedge advisor like Vice Capital.
Chris, I'll let you
So
start that.
I can tell you from our perspective, we have clients that are ranged in size from 5 million a month to 20 billion a year. It's a huge range. There are a number of firms that they feel like, well, we only do 15 million a month. We need to have at least 30, or that we're not big enough for that. And that flat out just isn't the case. If you're closing 2 loans a month, no, that's not enough. But you'd be surprised how little volume it takes for hedging to make sense. And a lot of times we've had a couple cases where um, they were 10 million a month, and they said, well, I know we might kind of be borderline on this, but I've got a lot of growth plans, and it's like the chicken and the egg. For me to be able to grow, I need to have my hedging program set up so I can push that through to the street and grow my volume. And companies like that are like a Stonegate company. That was exactly the conversation I had with Jim Cotillo back then. It was 10 million a month, and I feel like I'm close to it, but if I do this, I think I can build it. And lo and behold, about 3 years later, they were doing 1 billion a month. So I can't promise that to everybody, but they're it really the range. The range is much wider than most people think.
Amazing. And Mark, what about smaller lenders, credit unions?
That when I first came on board with Chris at my former company, it was at an IMB, and we weren't doing a ton of business, but someone you might be familiar with, a young lady by the name of Allison Johnston, came to work for me at the time, and she started talking, and it was a concept I wasn't even aware of, quite honestly, with what I'd been doing, and she started explaining it to me, and we started talking about it. I'm like, okay, and I mean, we were only doing a couple $1 million a month. It was not, and we went from doing less than 100 million, and then 2 years later, we were doing $750 million. It was, and I'm not saying that was the only reason, but it definitely contributed to our growth for sure.
And I will say that Mark is the first person to speak up at TMC and advocate on the behalf of small and mid-size lenders and specifically depositories, which we always make sure that we have a mix of each group's represented within our co-op or our lender member board. And Mark is there fighting the good fight for lenders. Chris,
Yep.
any closing thoughts before we wrap?
I guess one of the things I'd have is I'm here and I'm available for anybody on this call. You don't have to be doing business with us to call me up or send me an email and ask a question about something. Part of Vice Capital being in the collaborative and having been in the collaborative since year number one isn't just about how do we get more clients. It's about how do we help lenders. And if you're a client of ours, great. We're already doing a lot to help you. If you're not, we're still here as part of the collaborative to help out. So don't hesitate to send me an email, call us up. All my contact information is out there. Post something on LinkedIn for, whether it's a question or, hey, are you hearing this, or advice on something else? We're here to help lenders. That's the reason that we exist. So please don't hesitate. Don't think that if you're not a client, I'm not interested in talking to you. I love helping lenders. I have been doing it for almost 30 years, and I love doing it day in and day out.
Yep. And we'll ask that you don't take the calls of the other non-TMC lender members on the call until they become members.
Okay, that's fair enough, Jody.
But no, you share a lot of the same character that TMC and our mission really is to impact the industry. So we really appreciate the relationship with Vice Capital over the years and also with Mark and First State as well. But that's a wrap. It's been a great conversation, and we truly appreciate the insights that you shared today. A huge thank you to Vice Capital Markets for sponsoring this episode, and to Chris and Mark for lending their expertise. And of course, a special shout out to our listeners. Your engagement helps drive the industry forward. We'll be back next week on, oh my goodness, I don't even want to say the word, August the 4th. It's like, oh no, it's like back to school month, and yeah, it's scary. But we'll be live at 2 p.m. Eastern for the entire industry. And if you're not yet a member and want to explore everything TMC has to offer, we have two things coming up with you. You can either reach out to me directly, or you can join us on August the 6th, that we will be hosting the collaborative impact, and we will be talking through our working groups and how to weaponize the content of those working groups within your organization. So cheers until we see you next time on the SIP. Thank you, guys.
Thanks, Jody.
Thanks, everybody. Thank you too.